Hello everyone, Organic Stacker, and I'm back again with another health and wealth building video for you today. And in this video, I'd like to discuss a word that I'm sure you've all been hearing buzzing around the crypto world, stablecoins. What they are, what they're being used for, and why it seems like states, companies, and countries are all trying to jump on board the stablecoin train. Please remember these videos are not medical or financial advice, so please do your own research and contact your financial advisor or medical practitioner before trying anything you see here. And if you do find these videos useful, please like, comment, subscribe, and share. And with that, let's go. So what are stablecoins? Stablecoins are a cryptocurrency that's designed to remain stable, hence stablecoins. So unlike other cryptocurrencies like Ethereum, Bitcoin, or XRP, where their price can swing wildly up or down from day to day, stablecoins are designed to remain steady by being pegged to something more stable like the US dollar, the euro, or even a bag of mixed assets. So this, for example, will give the coin, let's say it's worth $1, it will stay at $1 regardless of what's happening in the market. So how do they make all this happen? Well, you'll find that most stablecoin companies are backed by what's called real-world assets. So cash, gold, or government-issued bonds that are held in a trust by the company that's actually issuing these coins. There are other stablecoin companies in the market that utilize complex algorithms to adjust their supply and demand accordingly to the market. But to keep things simple, we're going to stick with fiat-based crypto or stablecoins in this video. So fiat-based stablecoins. Think of them like crypto with training wheels. You get all the benefits of blockchain technology without the risk of price volatility. So you could say stablecoins are like the Swiss Army knife of the crypto world. They have a ton of uses. What are they used for? Well, for starters, they are a safe haven for traders. So imagine you're trading Bitcoin, for instance, and the price drops dramatically. Well, you don't want to use a cumbersome, old, outdated bank transfer to cash out into cash when you can use stable coins, instant transfer. They hold their value, and that will remain steady for you until you're ready to jump back in. They're awesome. They're also awesome for payments. So sending Bitcoin to pay for your coffee sounds like a great idea until your barista's sitting there making it, and by the time she hands it to you, your price just dropped your Bitcoin dropped 10% in value before you could even make your payment. Not so cool. Stable coins fix all that. They're fast, global, and predictable, and perfect for making everyday transactions and even sending money over borders to avoid those hefty fees or cumbersome transfer times. There's another big thing with stablecoins, decentralized finance, or DeFi. So DeFi, where you can lend, borrow, or earn interest on your cryptocurrency, stablecoins are the backbone of that industry. They enable users to interact with apps or smart contracts without that wild price volatility messing up any of their plans. It's really cool that you're able to afford that type of insurance, if you will. So why are companies starting to use stablecoins? Well, it's very interesting to see all this happen. And it appears for companies, it all boils down to control and opportunity. So look at the stablecoin USDC that's been issued by the Circle company. It's pegged to the US dollar and widely used. Now companies can integrate this coin into their platform, giving their customers access to it, which in turn gives them access to the actual crypto economy without having to build their own crypto or stablecoin from scratch. Really, really cool. It also enables companies to move money faster and cheaper than they would with traditional banking systems. So think instant settlements for companies and also creditors getting paid globally. So faster transactions, everything getting settled quicker and more efficiently. So what's the government's angle on stablecoins? So some states are exploring stablecoins, or at a minimum, a digital currency that attaches to their current money. They're doing this to modernize their finance. So let's take a look at places like the Bahamas, where they have the sand dollar, or even talks in the US for the US digital dollar. It doesn't have to be called a stablecoin to be called a stablecoin. It functions the same way. It is a digital currency that is stable, government backed, and built for the future. These governments want access to the speed and efficiency of the crypto market with total control. And don't sleep on competition. No individual, let alone a corporation or a nation, wants to be left behind while trying to attract innovation. So that's it. Stablecoins in a nutshell. They are crypto made to stay steady that is used for trading, DeFi, and payments, where everyone from companies to countries are trying to get on board. So I hope that you found this video useful and it inspires you to go out and learn more, not only about cryptocurrency, but to build your health and wealth portfolio. And I thank you so much for stopping by. And remember, if you don't stack your health, you can't stack your wealth. Organic Stacker. Talk to you soon.